What would you do if the Meta CEO gave you a tidy $65 million? Purchase a penthouse near Miami, or put some cash on reputable stocks and watch it grow? The Winklevoss twins took a different path. They purchased a lot of Bitcoin, and their wager is substantially succeeding. Rowing enthusiasts may recall their performance in the rowing event at the 2008 Olympics. They are also well known for co-founding Harvard Connection and suing Zuckerberg. But in recent years, the brothers have gained notoriety for cryptocurrency. Do the Winklevoss twins hold all of the Bitcoin? Here's their Bitcoin fortune story. The Winklevoss twins. Tyler and Cameron Winklevoss initially gained notoriety in the mid-2000s when they sued CEO and creator of Meta, Mark Zuckerberg, for Facebook ownership. The 6-foot, 5-inch boy's tale was told in the 2010 movie The Social Network, which also included the scene in which Zuckerberg paid them millions of dollars to leave. The brothers were raised in Greenwich, Connecticut, but they are from Southampton, New York, because their father, Howard Winklevoss, was a former professor of actuarial science at the prestigious Wharton Business School of the University of Pennsylvania. Cameron and Tyler left their privileged upbringing in Greenwich and relocated to the quiet environs of Harvard to pursue economics in the early 2000s. They both studied in economics while undergraduate at Harvard University in 2000. They both graduated with a BA degree and were active members of the famous Porcelain Club, an exclusive group for men, and the Hasty Pudding Club, one of Harvard's oldest affiliated social organizations. Both siblings first met Zuckerberg during these years. Zuckerberg enrolled at Harvard in 2002 and started working on projects like Face Match, which let users see who else was taking a specific subject, and Course Match, a site which gave Harvard attendees the chance to vote on the attractiveness of their peers. As a result, he gained a reputation as a programming prodigy very quickly, and his skills were soon in demand. When the Winklevoss brothers and Divya Narendra, a fellow student, needed Zuckerberg to help write code for a website idea they had, one that aimed to create a virtual community similar to Friendster. They developed an early version of the website dubbed Harvard Connection in the fall of 2003 with the help of a few student programmers. Later, Narendra proposed that the brothers see Zuckerberg to assist in finishing the project. Despite continuing to work on his own initiatives, such as attempting to develop the Facebook, Zuckerberg started building the website in November 2003. Like the majority of U.S. institutions, Harvard provided its students with a Facebook class directory that featured a picture of every freshman along with other information like their name and birth date. Zuckerberg intended to obtain their first, despite Harvard's plans to post everything online. Beginning in January 2004, the then 19-year-old and a few buddies created the Facebook.com, a website that anyone with a Harvard email could join, create a profile which contained a photo along with other details like taste in movies and literature, and connect with other Harvardians. Approximately 1,500 people registered on the website in a day. A month later, it expanded to include Stanford, Yale, and Columbia campuses, and by mid-June, it had 150,000 visitors. In a federal court in Massachusetts, the three founders of Harvard Connection, now named ConnectU, sued Zuckerberg in September of that year, alleging that he had stolen their idea and had delayed the launch of their business in order to implement his own. A settlement resolving both cases was finally reached in February 2008, with the Winklevoss brothers getting $20 million in cash and $45 million in Facebook stock, following a countersuit in which Facebook accused ConnectU of libel. They did not buy a private jet or luxurious yacht, nor did they invest their settlement amount in real estate. Instead, the twins learned about Bitcoin. Though their family firm, Winklevoss Capital, the brothers invested their settlement funds in scores of enterprises. They made a timely investment in Bitcoin, which at the time was relatively unknown digital currency. The brothers bought Bitcoin in 2013, purchasing over 100,000 of them, while it was trading at about $120. The twins reportedly had roughly $1.3 billion worth of Bitcoins in their possession at the time, according to the New York Times, and another $350 million in other cryptocurrencies like Ethereum. The birth of Gemini. Their experience in the cryptocurrency exchange market was challenging and dangerous. This inspired them to provide a secure environment for these transactions. In 2014, the Winklevoss twins founded the first regulated Ether exchange in the world, Gemini, in Winkdex, a financial index for monitoring Bitcoin prices. With the exception of a brief period of unrest during the 2018 bear market, the exchange expanded swiftly and earned a reputation as a reliable U.S.-based option for cryptocurrency investors. Before funding a cryptocurrency exchange, Gemini in 2014, the early Bitcoin adopters capitalized on the early 2010s digital asset boom. During the ascent of Gemini, the Winklevoss twins grew to become one of the first Bitcoin billionaires. But as the cryptocurrency craze expanded and the duo made a fortune, they also started putting more money into riskier ventures. When the twins applied for regulatory certification in 2017, the Commodity Futures Trading Commission initiated a lawsuit against them for making false statements about how their exchange and future contracts work. In 2018, Gemini launched the NFT marketplace Nifty Gateway, but the platform soon ran into security problems and was outperformed by the competition before being included into Samsung's NFT platform. The Winklevoss twins had introduced Gemini's Earn platform earlier that year, which was their most significant venture to date. The cryptocurrency lending service promised consumers who deposited cryptocurrency that they may, at any time, redeem their funds for enticing returns of up to 7.4%. Today, the typical American savings account only yields 0.2% in contrast. Do they own all the Bitcoin? Everything was going according to the plan until the crypto winter of 2022. The identical twins had a combined net worth of over $7 billion by late 2021, owing to Gemini's explosive growth and the daily rise in cryptocurrency values to new record highs. But things have changed now. The celebration, according to industry observers, was only getting started. But after the crypto winter destroyed more than $2 trillion in value from the nascent industry, the worm has turned for the Winklevoss twins. Currently, lawsuits are underway, and the brothers and their ex-friend, the crypto millionaire Barry Silbert, are engaged in a highly public dispute over what will happen to the assets that have been frozen for more than 340,000 users of Gemini's Earn platform. The recent problems at Gemini have had an impact on hundreds of thousands of people globally, and none of it would have been possible without Facebook. Gemini's only issue was that in order to provide investors with significant returns, the company had to place certain arguably dangerous wagers. Using the cryptocurrency of their customers, finding a solid return can be challenging in a down market, but it's not that difficult in one. The lending division of cryptocurrency investment company Genesis Global Trading, which is owned by Silbert's digital currency group, was one of the ways Gemini generated these gains. Genesis Global Capital is a subsidiary of Genesis Global Trading. Users' money was lent by Gemini to Genesis, which then loaned it to institutional borrowers. The Winklevoss twins were certain that the price of cryptocurrencies would climb, allowing them to constantly provide large payouts to customers through this plan. Cameron Winklevoss even revealed in September 2021, at the height of the crypto craze, that he thought Bitcoin would end the year at $100,000, which was less than $47,000. However, when cryptocurrency prices collapsed in 2022, it was a whole new world for Gemini and the Winklevoss twins, and Gemini Earn users were particularly at risk. Gemini has to eliminate 10% of its personnel by the end of June. A few months later, sources stated that the company would need to raise at least $1 billion in order to keep its Gemini Earn platform afloat. After FTX, the second largest cryptocurrency exchange in the world, collapsed, Genesis decided to stop granting redemptions to clients like Gemini, which made the problem even worse. Due to the ruling, Gemini was unable to cover returns or financial redemptions on their Earn platform. The Winklevoss twins offered interest-bearing accounts without properly registering them as securities, according to a lawsuit filed by Gemini's Earn users against Silbert and the Winklevoss twins. The lawsuit claims that Silbert broke his contract by stopping redemptions. Cameron Winklevoss said in an open letter to Silbert that more than 340,000 consumers have more than $900 million in cryptocurrency stranded at Genesis Global Capital, and that Silbert companies owe Gemini a total of $1.675 billion. Silbert was not responsive when Winklevoss continued by requesting a commitment from him to refund $1.1 billion for what he owes by January 8th. How much Bitcoin do they own? Nearly 1% of all Bitcoin stocks were purchased by the brothers in 2013. As of 2022, Winklevoss twins' Bitcoin holdings, excluding any other digital assets the brothers may own, are currently valued at about 70,000 Bitcoins. The Winklevoss twins teach us something valuable. Whether or not you're making money with cryptocurrencies, investing allows you to build your money over time with money you don't spend on luxuries like expensive automobiles. Even though the crypto exchange at Gemini, which is the company's major source of revenue, is currently in danger of going out of business, it appears that they are only thinking beyond simply accumulating wealth. Their tale of outrageous wealth and power goes on.